Right, then let's take a quick glance at the US dollar. It's Fed day. The FMC is widely expected to extend a pause to rate increases, keeping policy unchanged for a second consecutive meeting. Um, I don't particularly advocate trading on Fed day. The volatility can be rife and counterintuitive for the most part and difficult to navigate. I'd much rather let it play out and see where uh, the land lies the following day, or in fact, just wait until the following week as the dust has settled and we've got a better grasp and the charts are actually offering a more significant market structure to lean against, to bat against. You know, you sort of almost know what you're looking at in terms of your opponent rather than trying to second guess the next counterintuitive move from the market and the whales that are moving it. So, but you know, if you see a setup and it's in accordance to your trade plan strategy, your risk management rules, you've got asymmetrical risk to reward, and you essentially have it have it as part of your trading plan to trade on Fed day. By all means, have a good crack at it, and best of luck. Um, so we're expecting a broadly hawkish outcome, a hawkish policy tilt consistent with the September dot plot. Um, Now, one thing we're also looking out for is whether the committee are going to reiterate that it aims to proceed carefully as it formulates the next policy steps. Um, so I think what we're going to see in the rates market is a reaction to any hints about forward guidance, um, but you'd expect to see a bear steepening if there is a hawkish tilt as an outcome. And then for FX, well, looking at the US dollar here, the risks of a sell-off on a dovish outcome are are high in terms of where we're placed on the market, and we'll get into these technicals right away. Um, on a hawkish tilt, well, we could also see some upside, given that we're um, in that order flow momentum. So let's take a look at this. If we come out all the way to the um, weekly chart here, and we're just trying to determine where we're at in terms of supply areas. So just looking at this area here, anticipated as a supply zone. Having said that, I mean, we've got possibilities of coming all the way up here before seeing any real resistance. Potentially, we've already sort of popped up into the top of that week's business, so we'll just mark that out as well. So no idea, this can easily continue going up, even though that it's in the supply zone. We'll just box this off as well between that high and that high over there as a potential zone to move up into. So really what we want to be doing to be able to help us gauge as to whether this is going to continue going up or if we're actually breaking down and slowing or decelerating, if you like, within this potential supply zone. If we come down to the daily chart and take a gander and see whether we're actually breaking any structure, and it would appear, given that is the high, we could classify that as a swing low. So if we mark that off as well, and then we want to look right to see as to whether we're actually breaking that down, it appears that we've tried a couple of times, right? If we cluster these weak lows, 1, 2, 3, and then we've got a couple of weeks over here that have tried breaking into that. So we could argue that it's potentially breaking down, but not with any conviction. It's lower lows. They are lower lows, but we're coming back up here and we're taking out these highs. So that's quite a strong low by the looks of things, because we've broken this lower high, right? So we've moved up. So we could be, in fact, failing to break out here, and we're potentially moving higher. So that would sort of play into theme around the general theme around the U.S. Treasury in terms of their borrowings and the general feeling around the U.S. economy that it's outpacing the rest of the world's economy, um, and the safe haven flows into the dollar with regards to the ongoing crises around the world in the Middle East generally. So that's the fundamental lining up with the technicals here on a longer term basis. And then on the day count, in terms of our weekly uh, outlook, our weekly template rather, on a daily basis, come down onto the 1 hour chart. And in fact, let's bring this to a 4 hour chart just to clean it up. We've got the day count here. So we're Wednesday. So Monday, Tuesday, Wednesday. This is the low of the week so far on Tuesday, and we're pumping up. So we've got longs in the market taking out both Tuesday and Monday and Tuesday. So we've got Tuesday's high here, Monday's high. So we're actually got breakout traders in the market, and there could be momentum in this still. I'd like to see. I mean, so basically, in a nutshell, we've got 2 days of breakout in terms of the week's highs, daily highs. So Monday, Tuesday, and we're coming up into last week's high, right, as well as last month's high. I'd like to see at least 3 days worth of breakouts before I'm really looking for a significant um, correction. So I'm going to stick with a bullish bias on a technical basis and fundamental. Now we'll wait and see what the outcome is of the Federal Reserve decision, and so nothing really to do here until that decision has been made, and we'll see how the land lies.